Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Chris Englebert. He's a managing director over at Beirne Wealth Management for our monthly RIA strategy update. And for this segment, we are going to cover tax savings going into year end. It's great to see you. As always, Thanksgiving came and gone really quick, didn't it?
Yes, it did, absolutely.
And we are now talking about tax savings ideas going into year end. I'm sure you have a lot of clients that are interested in that right now.
Yeah, I mean, there's some very simple stuff that can be done. Obviously, if you have a taxable account, you should be pairing off gains versus losses. If you took gains earlier in the year, you've got to go through your portfolio. These are real simple ideas, but sometimes people just don't pay attention to it. The other thing about, pairing off gains versus losses, if you have a position in a particular stock that you really like, for example, some of the internet stocks, and you want to take a loss or a gain, you can substitute one of the sector funds, ETFs out there, so that you don't lose your position.
What about this year? Because it's a little bit different than 2017 was, of course. Positions look pretty good going to the beginning of October, and a lot of those gains that were made have been erased. Does that change the strategy when it comes to tax savings?
The only thing it really changes is if you don't want to lose your position. So maybe you sold something, and then you're saying, well, gee, I can't buy it back for 31 days. So what I'm going to do is substitute a sector fund or sector ETF in order to maintain my position.
Now, how about your 401k and in terms of how much you contributed for the year? What would you do going into the end of the year with this?
Right. We always tell people there's 2 times a year to review their 401ks, now and also at the beginning of the year. Right now, if you got a bonus and you haven't maxed it out, you still have enough time to max out your 401k. Obviously, if you're under the age of 50, it's 18.5. Over the age of 50, it's 24.5. So you still have some time if you get a year-end bonus or a couple of paychecks to be able to really max out that 401k. And the good news is the levels as far as how much you can put in go up next year.
Well, it's really cool with our plan at Nasdaq. It's really cool. They raise it 1% every year. You don't feel that.
Right.
10% going to 11% unless you're making ridiculous amount of money. You won't feel that in your paycheck.
Right. That's a great.
I mean, do you recommend doing that?
Absolutely.
If you can afford it, at least 1%?
Yeah, that automatic escalation helps with savings because we're trying to tell investors that the best way that they can save for their retirement is to continue to put that money in their 401k.
All right. Now, let's talk about starting up a donor-advised fund. What is that?
Yes, so basically a donor-advised fund is if you have some appreciated stock, you can put it into the donor-advised fund, and then later on you can make contributions to your favorite charitable organization. So I have some funny stories of clients that we moved appreciated stock in, and I said, well, you're not going to have to pay the capital gains on the stock, and oh, by the way, you also get the deduction as far as from the donor-advised fund. They're really growing in popularity. The minimums have come down. You can put money into a donor-advised fund for as little as $5,000. So, for example, if you need a last-minute tax deduction, you could contribute to a donor-advised fund now and then make the donations in 2019.
Now, if you're over 70 and a half and you have your RMD, that's your required minimum distribution, what can you do in terms of donations with that?
Yeah, a lot of our high-income retired clients, they take their required minimum distribution. It just adds their taxable income. But if they put down to put that money to, again, a charitable organization, they don't have to claim that as income. So, for example, if your RMD is $20,000 a year and you give $5,000 of that to your charitable organization, you're only going to claim $15,000 as far as income goes.
All right, let's switch gears and go to our second segment, and we're going to focus on segmenting your book for client services. So we kind of always finish up here with how to best serve your clients. What does that mean, segmenting your book?
Well, what most RIA firms do is obviously from a service standpoint, clients that obviously have more assets, we pay a lot of attention to. We're just trying to be as efficient as possible in running our practice. So a high net worth client is usually labeled a gold client, a silver client, a bronze client, etc. But I think RIA firms are really going to have to change how they think about segmenting their clients, especially the last couple of years. So we're in a late economic cycle. The bond market hasn't done very well this year. Some segments of the stock market haven't done it very well either. And so you're getting clients that over the last 2 years that you may have brought on board haven't really seen the kind of gains that they want. And so what we're really trying to focus on is educating those clients that have come on board the last couple of years. We have clients that have been with us over 25 years. They've been through several cycles now. They've made money. And when we do those client meetings, they're like, we understand, Chris, maybe this year isn't as good. But again, we want to focus on those clients that just became clients most recently.
I would imagine it's not that cut and dry as gold, silver, and bronze. You might have someone who might be in the silver or bronze category, but they're a great word-of-mouth advertiser.
Exactly.
They like you,
Yep.
they trust you, and they have 10, 15 friends that need advisory services.
Yeah, you have to put a special asterisk by them, center of influence. Center of influence is not just an attorney or a CPA. Center of influence could be exactly that particular person.
All right, let's wrap it up and look at some charts here because it's definitely a little bit different of a story than when we met back in October. The S&P 500, we'll take a look at that first. Are we at the start of a bear market? I hate labeling things like this
Right.
because it's more cyclical than that. Or are you looking for some consolidation?
Well, I really think that's the latter. The consolidation makes more sense at this particular time. I mean, a lot of people see the market's had a good uptrend this year, a correction at the beginning of the year. We had a severe correction October, November, but we still are more in the consolidation camp at this particular time. Psychology is changing in the markets. You know, we pointed out in our last month's segment about the 200-day moving average. If we get above that, then the trend should look like it could actually go up over next year. But again, that 200-day moving average becomes very important.
Right. I also think, too, we've gotten spoiled over the past 10 years where we've seen asset classes just continually rise. When asset price resets, that's a normal market.
Absolutely, yeah.
All right, and let's look at the Nasdaq Composite. Saw some damage with the FANG stocks.
Yeah, no question about it. I mean, we've seen that hurt put on. It looks like money is beginning to rotate out of the FANG stocks. I mean, I know that may be a little blasphemy to say that because they've been so strong, but it looks like investors are realizing that there's valuation levels there that are extremely elevated, and that there looks like there's other places to make money in 2019.
Right, well, that's smart investing. So Russell 2000, small and mid caps, they're telling us something different.
Yeah, they haven't really participated. So this week we saw a huge rebound rally yesterday, as a matter of fact. The Russell kind of seems to be stuck in the mud right now, so we don't know. We commented last month that they could be warning us of a possible slowdown in the economy next year. We would tell investors to keep an eye on the Russell 2000.
All right, in the 10-year, rates are still high considering that we had an equity.
Yeah, it's been a little surprising with the sharp sell-off we had in October, November. You would have thought that the 10-year would have cracked under 3% as the risk trade. You know, people sell stocks, they buy bonds. We have seen rates move lower, but not to the magnitude we thought they would. I kind of think that 3% is the line of demarcation in the sand. As long as we stay above 3%, maybe the economy's doing well. If we dip below it, it might not be doing as well in 2019.
All right, let's wrap it up with crude oil. The moves that we've seen in crude and natural gas, for that matter, these percentage moves is not typical in the commodity space. It's been just blowing through stops, basically.
Yeah, correct. I mean, the big story in crude oil is this, nice acceleration on the upside, followed by a huge sell-off in the market. Seems to be driven by a lot of news out there. And again, our point is we think that crude oil may end up going through a consolidation, but is crude telling us the sell-off means that there's a possible slowdown in the economy in 2019? We've got to wait to see what happens with crude oil and if it rebounds or not. Typically, after such a sharp sell-off, you tend to see some kind of recovery and some type of trading range begin to develop. All
right, we have 1 month to go. One more hit for 2018. What are you going to be looking at over the course of the next month? What are your catalysts?
Well, what we're going to be looking for is obviously we had the chairman talk yesterday, and that really sent the markets going on. We've got a possible shutdown of the government coming. We've got some end of the year cross currents happening too. But typically, when you have a poor October, November, December tends to be much better than what people realize. So whether or not Santa Claus makes his appearance, we'll be able to tell people that next time we see them.
Well, I'm sure we'll be hearing a lot about the Santa Claus rally over the next month. Thank you so much, Chris, for joining me as always. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.